Hello folks, this is David Schlossberg from Assured Concepts Group with your July 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic events from last month and give you some insight into what they might mean for you as an investor. Greece was again at the center of headlines last month as the country edged even closer to financial meltdown. On the domestic side, second quarter earnings season kicked off, giving investors a clearer picture of how companies did last quarter. In mid-July, Greek and European negotiators were finally able to hammer out a compromise that keeps Greece in the Eurozone while instituting some of the reforms creditors wanted to see. However, the wheels seem to be coming off the deal already, as both sides ultimately want very different things. The Greeks want austerity relief and debt restructuring, while creditors want further reforms. Will the deal lead to a final resolution on Greece's issues? We're not so sure, and it seems Greece may continue to disturb the markets. Earnings season came into focus in July, and the picture so far is just so-so. Out of the 263 S&P 500 companies that reported, earnings were up just 3.2% year over year on essentially flat revenues. This reflects a continued reduction in expenses without any increase in gross income. The energy sector is continuing to drag overall earnings growth because of low oil prices. If we remove energy companies from the picture, analysts expect overall S&P 500 earnings to be up 5.3% year over year, with 1.2% higher top-line revenues. These results tell us a lot of the weakness companies experiencing in the first quarter are staying with them in the second quarter. Will U.S. firms be able to shake off the doldrums in the second half of the year? It's hard to say. With the European and Chinese economies still struggling with growth, the global demand picture doesn't look too strong either. Domestically, the economic picture is doing reasonably well. Hiring is increasing steadily, and wage growth is starting to edge upward. But consumer sentiment dropped in July, probably because of concerns about Greece and China. We also got our first look at second quarter gross domestic product, or GDP, which showed that the economy grew at 2.3% last quarter. While economists had predicted higher growth, it's still a vast improvement over the 0.5% the economy grew in the first 3 months of the year. The Federal Reserve met again in July, and though no interest rate changes were announced, the central bank did reiterate its intentions to raise rates sometimes this year. The Fed did cite improvements in the job market in support of its intentions, though future decisions will still be contingent on further job gains. Are these expectations baked into stocks and bonds already? Well, we don't really know for certain, but the Fed has been telegraphing its interest rate play for months now, so we hope that markets won't overreact when rates finally do start going up. How fast will interest rates go up when they do? We don't know how fast the Fed will start raising rates, but everything they've said thus far tells us they'll move cautiously and keep an eye on the data as they go. Looking ahead, investors will be looking for earnings surprises and gauging expectations for the third quarter. The economic picture is pretty mixed right now, so investors will be keeping a close eye on data in the coming weeks. As always, we're keeping a close eye on markets as well, and we'll update you as new information becomes available. That's it for the July Educational Economic Update. If you have any questions or concerns about what we've discussed, please give our office a call at 847-426-1077. Once again, this is David Schlossberg with Assured Concepts Group, signing off for the month of July 2015. Please do remember that nothing we talked about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call. We'd be happy to talk. Thank you.